A little soft, but there wasn't a lot of volume behind it, and volatility really didn't go anywhere still. The term structure still about 6 points between front month and back month. If you look at the September expiry, June expiry.
Yeah, that's about right.
Small jostling, uptrend remains in place. Hard to say that this is the top just right now.
Oh yeah, I don't know if that's the top, but the volume in the S&Ps in the futures was kind of soft all day, but the volume in the options was actually pretty busy. We did almost 70 million contracts. The world's found the world's found options. No question about it. And it's just a much more capital efficient, much more strategic way to play the markets. And especially on expiration Friday, there were a lot of zero DTEs trading. There was a lot of stuff, we were higher pre-market. We closed lower. There was at least a little bit of, two-sided action. The bonds were pretty weak all day. And the rest of the market, at the end of the day, it got a little soft into the close. There were a few people going home nervous over the weekend.
There definitely were. And Friday afternoon, of course, we had that Trump Putin summit over in Alaska. But Friday's expiration was the 2.9 trillion notional expiration, the largest that we've seen for the month of August ever. In the morning, 1.2 trillion were settled, 1.1 of which were S&P 500 morning contracts. The other side of this, 1.7 trillion in the afternoon.
Yeah.
So, you say options are eating the world. August is not supposed to be a busy month, and here we have a record.
Well, it's just that there's a couple of reasons why there's a record. First of all,
sure.
The value of the S&P contract is just, we've gone from in 2008 from 667 to 6,500. So that's part of the reason that the notional and just there's more players now. The stakes are bigger. There's so much more capital markets that you're always going to set records going forward. What would scare me is if we don't, set records of what expires. The other thing that's really, really cool to notice is how freaking efficient the markets were. You have trillions of dollars of notional value expiring, and you have efficiency like you've never seen before. And when you think about that in other terms, like if you think about that in let's just say Bitcoin, let's just say, or digital assets, let's say sports gambling, whatever it is. When you think about that, those are like tens of billions of dollars of actual tradable currency. The digital asset market is a couple of trillion, but how much can you actually trade without pushing the markets too far? The liquidity is not that deep. It's maybe 100 billion or something like that. In the equity and bond world, you can push a couple of $1 trillion and you barely move the markets. And so when you just think the entire sports marketplace trades in the first, let's say 10 or 15 minutes of Friday morning. I just want to give some context to people who think, sports gambling is huge. Well, it's about 5 or 10 minutes, maybe 15 minutes max of Friday morning's opening, the entire marketplace. So it's just kind of interesting when you put that kind of, context around what's happening. Looks like pre-market here, we're going to really, the indications are for, well, basically unchanged. S&P's opened down $1. Now they're unchanged. NASDAQ's up 12, which is 12 handles, which is nothing. The Dow looks like it's unchanged, and the Russell's unchanged. The S&Ps are unchanged. Bonds are unchanged. You know what? Chris, this is what we would call a quiet opening.
It's certainly a Sunday market open, if there's some way to describe it. No, we're basically unchanged here, which I suppose, given some of the angst going into the weekend with that slight uptick in vol on Friday, is ultimately a good thing. But vol is still absent. 11.6 IVR on the screen right now for the NASDAQ. Yeah. Same thing, similar territory for the S&P 500. I guess the question is, what do you like this week, Tom? We don't have many significant earnings. Go ahead.
First of all, the market loves, that the market loves the slop. And last week was kind of sloppy. We didn't really go anywhere. I felt like the entire week we were trading wrapped around 6,500, and then we finally get towards the lower. We only had on an expiration week, we only had a $75 expected range. I think the actual range for the week was probably even less than that. So this is a sloppy market. And the market also likes a sloppy geopolitical situation where, obviously the whole Trump Putin thing was kind of just a worthless, it was just a a showboating exercise, but nothing was actually accomplished. I think the market, I'm not saying that it doesn't want a positive outcome, but I'm saying that, there's nothing that changed. And so we're really looking at just, more of the same going forward here as we get towards kind of, next week and then the week and then Labor Day. And the market has a tendency, I think this is important, it has a tendency to be really busy in the September expiration cycle, which is a triple witching cycle. And it also, like if you think that the notional that traded in August was big, wait till you see the notional that trades in September, because that's when all the S&P contracts come off. And that's one thing. And then we're just in that period here where where the market is, it could be, like you said, it could be building a base here to take the next leg higher, or it could be kind of just, hanging on by a thread. And it could be, I don't know. I really don't know. The shorts have not gotten paid at all. And the longs have been rewarded and they've taken no heat. And so I think the level of complacency is quite high as measured by implied volatility and other stuff. But, and I don't think we have much earnings this week, do we?
Well, that's what I was going to get into here. I was looking at the calendar and there are some items of interest. Monday, Palo Alto Networks, perhaps. Tuesday, Home Depot. Wednesday, looking at Lowe's, TJX, TJ Companies. Walmart on Thursday with Baba and Intuit. And then Friday, BJ's and Buckle Inc., BKE, which I've never. So
I think Walmart maybe, and it's hard to get a read. I mean, these are like a lot of retail stocks this week, which
yes,
I don't think those companies are other than Walmart, which is kind of tradable. I don't think any of those other companies are, even Home Depot is not really that tradable anymore, except for earnings. And on Friday also, we should just mention, I think that if UNH hadn't, popped like, $30 or whatever it was, could have been a little uglier, but that really kind of saved the market a little bit on Friday. But can't take it away, so it doesn't matter. I think that earnings won't matter much, but I do think that for a lot of the fundamental traders, I think kind of the retail sell sector has a little bit, is interesting to them. To me, I don't think it matters one damn bit.
I don't think it matters either. I think the market's just waiting on NVIDIA, which is not this week, but the week after. Besides NVIDIA, which has basically gone nowhere for the past month, we'll call it, maybe 3 weeks. I'm not sure this is a calendar that interests anyone this week at all. We've gone through all the big data releases as well. Non-farm payrolls, CPI, PPI. Jackson Hole gets people's attention, Tom. Good fishing out there.
Yeah, I mean, I always laugh about it. I kind of feel like all these guys just go drinking at the Mangy Moose or whatever that place is at the bottom of the mountain, and they don't, and think it's just I think it's a way to escape your family for 4 days and just say you're at an economic conference. I don't think they do anything. Except, maybe they go to one conference a day, and the rest of the time they're in the spa. So no, I'm not looking forward. I don't think that. I do think it is interesting that, that for 1 second there last week, I did think the bonds were going to break out over 116, and now they're back down to 114. So that's not encouraging for those people that, that are all over an interest rate cut here. If they're teetering here, if they get into the 113 handle, there's no chance they're cutting rates. But if they get it back over 115, we did go home long bonds. So definitely long bonds and short the market. That's how we went. That's how I went in on Monday morning of last week, long bonds and short the market. And there was some okay trade in that, but not great. And then this week, I'm going the same way, long bonds and short the market. We'll see what happens. I do think we closed about 5 handles underwater. About 5 handles underwater on Friday, which just means we sold off after the cash close. So they're making it up right now, and about 30 handles in the NASDAQ. So that's where we are right now. It just brings us back to about fair value. So this is a kind of a nothing opening for me.
You were mentioning bonds, and they fell apart really in a gross way last week. But perhaps the more surprising thing, you look at notes, you look at bonds, despite that pullback, where's the volatility? I've been making some hay here, just being directionally neutral in notes for the past several months. Anything that we're wrapped around 111.5. It's been working, but the risk to reward on these type of trades is starting to become less appealing because there's no vol. Does that inform you on anything?
No,
yeah, tell us.
The reason there's no vol is because people that have bought vol in the bonds have been destroyed. And the reason for that is we've been trading in a range. You can bring that chart back up for a second if you can on the ZN. We've been in this range basically the entire, what feels like since, forget about October, but I mean, sorry, April. But since basically you have to go all the way back to April, and we have been wrapped around the same numbers in there, trading around 111, between 110 and 112. And anybody that bought anything upside or downside hasn't made a dime. Like literally, you can't be long vol. So the street, everybody is short vol in bonds. Now, the same people that sell vol in bonds aren't the same people that sell vol in the S&Ps necessarily, but the high frequency firms are all long vol and customers are all short vol in bonds and notes and bond options, whatever it is. So it's a very weird time right now because these high frequency firms are choking on long options, and the customers have been reaping the benefits of vol not having an uptick. But, I mean, maybe that flips. I don't know.
Do you think that the volatility here, even with a 2.2 IVR and notes, is appealing? I have this structured on the screen right now. Short the 109, 114 strikes, long the 108, 115 to round out the short iron condor trade. Well, 63% pop.
As long as you stay small, you have to stay in this trade until it breaks out either way. Like, the beautiful thing about vol, this is really important to everybody who's listening tonight. The beautiful thing about vol is, and we've talked about this before, is that 70% of the time it stays in what we call a lull state, which means it doesn't do duty, just sits there. It doesn't go up, doesn't go down, just sits there and it contracts a little bit. 20% of the time it contracts. So what you see here, this is the TLT IVR. And what you're seeing here is this exactly what I'm suggesting. 70% of the time it's in this lull state where it does nothing, and then 20% of the time it contracts. So 90% of the time it goes down or stays flat. 10% of the time it explodes. And that's when you get caught. So basically, the pot odds are 9-1. I'm not saying there's any theoretical advantage. I'm just saying that, you can ride these things out. This is one of those lull states in bonds that it might stay like this for another year. I think vol's going to stay low in the bonds and bond options, but I think the prices are going to slowly uptick unless there is a catastrophic, unless there's some catastrophic dangers that are lurking below the surface because of, current tariff policy or current isolationist policy, whatever it might be. But unless there's something lurking below the surface, vol could stay like this all the way to the middle of next year in bonds. I don't think it'll do that. I don't think stocks are the same, because stocks are much closer to a price extreme than bonds.
Before we bring Ilya in a few minutes to talk a little bit more about metals and ultimately currencies, let's spend some time on energy here. Sure. I can't help but notice on the other side of this weekend of Putin and Trump up in Alaska, oil prices are coming off the board. There have been some encouraging headlines from the way that I view the world. The photos of those pixels missing in the skies, the bombers, that's cool and all. But what we really care about are ways potentially to end the war, and that has inflation implications from where I sit. But oil breaking lower, stocks gently up, vol pinned around a 30 IVR here. Do you see a trade? Do you see something more directional coming together for the oil market outside of this weekend?
I wouldn't buy it here. I think that, if you're thinking global economies are going to get softer, I wouldn't buy oil anyway, because I don't even like trading it from the long side. Unless it gets down into the low 50s or high 40s, I wouldn't even take a shot to the long side. I don't get what the upside is in oil here. I don't understand it at all. I think if you were going to argue, it's been in a really decent decline as of late, but I don't know why it can't go lower than this. I wouldn't, personally, I wouldn't buy it here. Now, I was at the Cubs game today, and the Air and Water Show was in Chicago. So these pilots were buzzing doing flyovers over Wrigley Field. So when you just mentioned flyovers, I'm like, okay, because it was kind of cool at Wrigley.
There's actually a pretty funny video going around from, maybe it wasn't yesterday's game, but the game before. It was during one of like the WGN commercial breaks.
Oh yeah,
And they have the Cubs dugout when they do one of the flyovers, and Justin Turner and Cody, like these guys are, except for Kyle Tucker. Kyle Tucker was cool as a cucumber. Didn't flinch once.
Yeah, I saw that. That was great. That was a great video. I think that was Saturday's game because that was the big one. Today they only did a couple of flyovers, but it was kind of cool. Anyway, yeah, Chicago's buzzing this weekend with the Air and Water Show, with the Cubs in town, with the Savannah Bananas in town, with the UFC in town, and of course with the Tasty Live show in town.
I went to the Mets game myself yesterday, and I went with a friend who flew in from Arizona, big Mariners fan. So he's in New York. Mariners are here. Let's go see a game.
Mariners fan said nobody ever.
Well, he's a Seattle guy, happens to live in Tucson. So okay. He said that the experience at Citi Field was the closest thing to being at a basketball game at a major league stadium. He said it was unlike any other experience he's had, if that's a good thing or a bad thing.
I don't know what that means.
I think you should come to a Citi Field Mets Cubs game and see what it's like there.
Maybe. Anyway, getting back to this. See, you put natural gas up on the board. That is,
it's a 40-50 IVR. Have to. Yeah,
and it's something that I've been trading actually, but this is something that we're leaning on the long side on. Only because if you're looking for high IVR, something that's oversold that actually has even a little bit. Remember, when you trade commodities, there's very little premium in the puts because, like in natural gas, there's huge call skew, which means the calls are very expensive, but the puts trade dirt cheap because the thought is at some point, it doesn't pay to grow oil. It doesn't pay to grow gas. I know that's just an expression, but it doesn't pay to dig. Okay. And so puts generally trade cheap, but now they're okay. And there's some decent value in some short puts in natural gas and some short put spreads. But again, it's a super big contract. So be careful and don't get ahead of yourself. I've seen it go to $1 before, and I've definitely seen it under $2. So don't get cocky here.
Well, what I'm looking at before we do there, I was just looking at the 20 delta strikes here in natural gas. The spread here is about 76 to 80 cents, or 7.6 cents to 80 cents. On the call side, it's only about 6.3 cents.
Well, it's just because it's Sunday night.
I wanted to caution on that, but right now the downside, you could still get something like risking 3 to make 1 on a 60% plus pop, looking to sell a short put spread. I'm out of the market for the time being. I've had a few bad trades in natural gas, so I'm not touching it.
I'm in there. I'm locked and loaded at this current level, but I'm not going to add to it. All right, let's bring in Ilya because I want to cover a couple more topics.
All right, let's bring in Ilya.
Keep it on schedule tonight.
Gentlemen. We are running here on schedule. Welcome, Mr. Spivak.
Gentlemen, how goes it?
Very good. Very good. Thanks for coming on, Ilya. So,
of course,
we've now put the band back together, myself, Chris, and Ilya. And, I still think, Ilya, that the market this is an equity market. I mean, we can talk about natural gas and crude oil and bonds and currencies and if you want to, some of the softs, and even digital assets. But the reality here is, if you're trading right now, you are absolutely trading equities if you want to make money. I mean, that's where all the action is. That's when Chris talked before about, like however many trillion, almost a combined $3 trillion in notional value that came off the board, of index arbitrage positions. Those are not commodity positions. Okay. That's all equity index and equity options expiring. That's where all the action is. The commodity market is minuscule compared to what's happening in the stock market right now. And there is an enormous amount of money committed to the stock market. And I don't think, so I guess my question for you is, if the market starts to go in a certain direction, like it starts to break out here to the upside, or it starts to get really soft here, it's going to be hard to turn that boat around.
Yeah, I mean, I think you're right that we're in a very risk on, risk off type of an environment. And the stock market, call it the S&P 500, is your avatar for risk on. And everything is kind of, you look at gold, you look at the dollar, bonds, oil, they're all kind of sideways. They're all kind of idling, waiting for that risk on, risk off signal, waiting for what basically the S&P 500 is going to decide that it's doing. And that's going to give everybody direction. I think in that sense, it's a very binary kind of a market.
So I'm going to ask you a quick question. On a scale of 1 to 10, and I'll ask you guys both this question. On a scale of 1 to 10, where are we on the complacency meter with the stock market?
10 being the highest?
10 being the highest level of complacency.
We're at 15.
I love that answer. Chris, where are we on a scale of 1 to 10? Where are we on the complacency meter for the stock market? We talked about how low volatility is, but where are we on the complacency meter? This is just a general feeling you get from emailing with customers, from trading on your own, from watching the markets. All three of us, all we do all day is watch the markets. I mean, we don't have our lives are not,
that interesting.
We're not jumping off planes and saving stray animals, whatever it is. We're sitting there staring at the screen all day long. Where are we on the complacency meter?
7.
Okay.
8. But we can see, this is the thing though, like we could stay at a 7 or an 8 for a very long time.
Yeah.
And there's a lot of evidence that the markets reach valuation levels akin to where we were during the dot-com bubble, but that's not enough of a sell signal as a trader because we could stay irrational during the next 45 and 21 day out window. So you have no choice but to ride the bubble if it's a froth. You have to ride the froth.
7 or an 8 is not a bubble.
No.
But if Ilya's right and we're at 15, A, that's a bubble, and B, that's where you cannot stay.
No.
There was
unfortunately, you never know when 15 becomes 5. Because these things, like once it gets really, really frothy, it corrects really quickly. It's an elevator down. So it's the timing here that's very challenging.
One of the most interesting stats that has stuck with me like my entire career is I was doing a money show in New York City in March of 2009. And we had a massive crowd at the Marriott Marquis one night. And I was the keynote speaker, and I was presenting, this is 16 years ago. And I was presenting, I was presenting a bunch of trade ideas. And volatility in some stocks was over 200%. And these are Dow stocks and S&P stocks trading with 200% volatility. It was a different level of extreme than we've ever seen since then. But what I found to be the most interesting stat at the time, which I brought up because we owned Thinkorswim, the brokerage, was that the amount of customers that were borrowing money from us to buy stocks was 20% of what it was 6 months earlier. I don't remember the exact number. Like it could have been, let's just say it was $50 million because we were a small stock firm. So we had at one point $50 million being loaned out. And then we get down to March of 2009, and we're loaning out $10 million. I don't remember the exact number. It could have been 100 million loaning out 20. I don't remember the exact number, but it was 80% lower than it was at the top. That essentially absolutely marked the bottom. Like that was it. And I don't know right now how big the margin balance is. Somebody had told me it's about $1 trillion, which
it cost $1 trillion at the end of the first quarter.
Yeah, and now I don't know how big that is on a relative basis because I know it's the most ever, but I don't know if that matters because the size of the market and all that kind of stuff. So I don't even know if that's an extreme, but it's definitely not a bottom. That right. We know. So we're right. Closer to a top than a bottom. And so I bring that up only because it's kind of okay. There you go. Debit balances and customer security accounts, and you don't make.
This is coming from FINRA, by the way, so it's not proprietary data. This is industry standard data.
Okay, good. There you go. And those are basically your self-directed customers. There you are.
Mm-hmm.
I mean, because people that have money that's being managed for them, put it back up for a sec, Chris. People that have money that's being managed rarely buy stocks on margin. People pretty much, use the capital they have in their account. The people that trade on margin are self-directed online traders or people that, call their broker and say, hey, buy something for me. But this is very much a very public number. Institutions don't really buy, prop traders trade on margin, but that's it. It's an interesting, we're at an interesting level. I'm not saying that this is by any means a high. I don't even look at this stuff. I just bring it up because we're always out there searching for, I have two red flags, this being one, and the insanity in the IPO market being the other one. And those are the two things that kind of make me say, I'm looking behind me. I'm like looking to see.
When you mean the insanity, can you just be a little bit more specific for the listeners?
Well,
is it the fact that 200% performance on the day of listings kind of thing?
Yeah. I mean, listen, okay. I understand bringing companies out on a range that's significantly below where you think they're going to trade because most of the insiders can't sell. And so they have to wait 6 months anyway. So you try to create this crazy buzz around your stock. And you also want to take care of some of your best customers, I guess. But the reality of this is you shouldn't price a stock at 30 and see it trade at 110 same day. Like when you're seeing that, there's something going on because you can't short. It's not a short squeeze because you can't short it. So there's no short squeeze. Like it's one thing, like if it's a GameStop and you got some hedge fund in there, blowing $100 billion because they got short something. That's not the case. You can't even sell stock short on an IPO. So these are just longs that are like, I got to get in because the next tick's going to be higher, not because I like this company. And it's a game. And I think that's a red flag-ish to me.
That kind of, not that there is a definition of a bubble that anybody can readily put a finger on, but if you had to kind of abstractly paint the psychology of a market in a bubble state, it would be this kind of greater fool way of trading where you're saying, well, I have to be long because it's going to be higher, and that's the only reason.
Yeah, that's right. That's right.
Yeah.
And usually if you're thinking that, you're thinking, well, I could push this higher because there's shorts out there. Like it could be, a meme stock squeeze, whatever it is. But when there's no shorts out there, who's holding this thing up? And I also want to bring that up as another topic because I really want to focus on the stock market tonight more than commodities, because I think that's way more interesting to everybody that's listening. And the other thing I want to focus on, I just don't know that many people who are short here. Like usually all my crazy friends are, they're when markets are at tops, they're short. I'm asking everybody, I'm not really short here. Nobody's, I don't know. I don't feel like there's a lot of shorts. I don't know if you guys feel the same thing.
But there's actually a lot of shorts. That's the thing. The CFTC COT report from the most recent week that came out on Friday. The market's the most net short now among speculators since March 2024. People are selling into this. Futures traders are, at least. March 24 gave you a small window. Granted, Ilya, I think we would point to geopolitical risk there. Iran, Israel.
Yeah, there was a little bit of a...
They fired missile to Ayatollah's birthday up on April 19th. Still don't know why I know the Ayatollah's birthday. I've really been trying to befriend him, Ilya. Hasn't worked out well.
It's because he won't reply.
He still hasn't responded to a single direct message of mine over the past year. It's really insulting.
He doesn't respond to emails?
No, I can direct message him on Twitter. I've been DMing him on Twitter for the past year. He hasn't responded to a single one.
Not even one of the minions took the time. It's just
that's
pathetic. Just rude.
Yeah. It's rude.
It's just rude.
But I'm looking at the CFTC COT report and I go, okay, net 120,000 net short contracts. This is the most we've been net short since the last week of March 2024. So make it make sense.
I will. I think that came off. I think the ARB was setting up to buy stocks and sell futures. I think that number, if you checked it tomorrow, is going to be a fraction of what it was Friday. I think that ARB, I think a lot of that came off on Friday. When the unwind on Friday, that's why all that stock traded. The unwind was all that stuff.
Well, and you would assume that a lot of people that are as net long as they need to be for the market to be where it is are also long the cash equities and hedging in the futures.
Yeah,
So,
I mean, if you look at the futures volume right now,
Yeah.
it literally is all just it volume picks up only on down moves. Like the S&P volume has been anemic. It's been like
Paltry.
900,000 cards, maybe a million. And on these huge up moves, when the option volume, which is the more speculative volume right now, because it's individual stocks, has been trading, 65, 70, 75 million contracts. It's all one-sided speculation.
Mhm.
That's the summer. Low volume, low volatility. The market floats higher. Tom, we have a hard stop here at 5:30 Central today. We only have about 2.5 minutes left. Dealer's choice. How do you want to end this out? What's the most important thing traders should be focused on the next few days?
Well, I'll go first, and then you guys can wrap up. Whenever we go through an expiration cycle and all that cash, like you just talked about, a couple $1 trillion just came due. When that happens, I kind of feel like there's a little bit of a continuation of the market going in the same, maybe a little bit lower, finish the week a little bit strong, but it's hard to say because we were kind of mixed all week. Until you see something different, I think the call for the week is choppy. Be careful, because I think there's a lot more offered above than there is bid below. That's the one thing that scares me. I don't know when I don't feel like there's a lot of shorts out there. I don't know who the buyer is on the way down. When I feel like everybody's long, I know who the seller is on the way up. So that's kind of my word of caution. But I am staying long bonds this week. I am a little long natural gas. Everything else we're kind of short some premium in, and we are short equities. I'll let you guys wrap up.
I don't have exposure in equities at the moment, but I'm not looking for anything on the long side. I'm looking for Friday's pullback to confirm a little bit, to get a little bit of a timing signal to reestablish shorts again, because I think the risk reward is just demanding to look that way. You just need a little bit of confirmation. It's the sort of the same thing as it's been. There's more room on the downside than there is on the upside. The opportunity is asymmetric. If the price action tells you it might be go time, it makes sense to take a stab. So I'm waiting there. I'm very long the US dollar because I think it's bottoming, and I'm long the bonds. Obviously, that didn't work very well last week, but I'm not near any red lines yet. So on we go.
So in for S&P 500, 6,700, Tom. So that's where I sit looking for the end of September. I tried to worry about the bear side. Ilya and his snake eyes enchanted me into taking some short delta positions, and I got nothing but burned. So back to being a dumb bull in the Radigan way. No more thinking. Tom, I know that you have to go, and we're done here with First Call. So we'll see everyone as usual, 2:30 Eastern, 1:30 Central for the start of trading in London. And then, of course, Monday morning, Tom and Tony are back with Vanetta, right to kick things off, 7 Eastern, 8 Central time. Nope, 8 Eastern, 7 Central time. Got that backwards.
There you go.
Ciao for now, boys.
Good luck trading.